Hi, it's Michael Regan with the Regan Team Home Loan Group, and welcome to this week's Real Estate Roundup. First, we're going to start with the home builder sentiment. So, essentially, home builder sentiment is letting people know what builders are seeing in the market. And right now, they're looking at current sales expectations of 37, so it's actually reduced. Future is at 42, again, has come down, and buyer traffic has also come down. And essentially, anytime that you see a reading of 50 or under, that's not a great thing. And what they're seeing is with the war in Iran, interest rates went up, especially they spiked, oil prices, everything got more expensive. And then so the market that was really heating up in January, February, and even into March was really starting to heat up. And this war put kind of a kibosh on all that. And it has slowed things down. Now, that won't stay that way forever. When things normalize and settle, and the interest rates start to come down, and they have come down somewhat from their peak. Nonetheless, we are going to see a housing market that will heat up because there was a ton of demand early this year before the war, but right now, not looking so great. That being said, that is a great opportunity for buyers right now because there aren't as many buyers out there. And I'm still seeing multiple offers right now, but nonetheless, this will be better. Then once the market, really starts to heat up, then you'll even have to deal with more offers and have to overpay even more. So this could be an opportunity for some buyers out there. Now, pending home sales were up 1.5% month over month. They are down 1.1% year over year. And again, the slowdown happened from the beginning of the year, really good. You were seeing a lot of activity, especially on the West. Unfortunately, because of the war, rising interest rates, people really slowed down. But again, I do see that changing once things normalize. Now to what the market's doing today. So we're down 14 basis points in the Fannie Mae 30-year fix. And you'll see the chart. Red is bad for rates, green is good. So obviously when the war first started, rates got a lot worse. And then around the 27th of March, rates started to get better. Now they've kind of petered out. We haven't got back to the point we were in early March or late February. But nonetheless, rates have gotten better, which is really good news, even though the market hasn't picked up because obviously there's a lot of fear out there, rising gas prices, things have gotten more expensive, and it has slowed down that normal spring market. There is a ton of demand. So I would just say, if you're a buyer and you're really thinking about it, this may be your opportunity when it's a little bit slower. The market's there's definitely some fear. That's actually when you jump into the market because you're going to face less competition and rates have still improved significantly over what they were. Yes, they weren't, to the levels they were at, but they've improved significantly. And going forward, the real driver of mortgage rates is going to be what's going on in Iran. As long as the war is going on, there's a lot of fear and uncertainty. You're going to have big fluctuations in rates. Now, I do think that once that war is handled or a negotiation has been made and you see oil prices come down, then mortgage rates will follow and the housing market should heat up. And that's it for this week's market wrap. Don't forget, we specialize in cash flow loans for self-employed business owners and investors and reverse mortgages. Have a great week.